Good morning, everyone. My name is Dennis Trainer, and I'm the Chair of the Joint Authority and Canal Corporation's Audit Committee. Welcome members of the committee, John Kamel, Anthony Vicente, B. Gonzalez. Welcome Nypa staff, members who are participating. This is a scheduled committee meeting, which has been duly noticed as required by the Open Meetings Law. I call this meeting to order. We will begin with the adoption of the agenda. Do any of the committee members have any amendments to the proposed agenda? Seeing no.
Happy to move it.
All right. Is there a second?
Second.
All in favor?
Aye.
Opposed? Motion carries. The next portion of the meeting will be held in executive session. The meeting resume in open session in approximately 30 minutes. I ask for a motion to conduct an executive session to discuss the financial and credit history of a particular corporation pursuant to 105F of the Public Offices Law.
So moved.
Second? Is there a second?
Second.
All in favor?
Aye.
Opposed? Motion carries. Okay, at this time, I'd like to ask for a motion to resume meeting in the open session.
So moved.
Is there a second?
Second.
All in favor?
Aye.
Motion carried. Opposed? Motion carries. There were no votes taken during the executive session. I'd like now to ask Angela Gonzalez, Senior Vice President, Internal Audit, to present the next two items. Angela?
Good morning, trustees, EMC, and Nypa staff. I'm glad to be here this morning to give you an update on our Nypa and Canals 2022 audit plan.
We're glad you are here, Angela. Just,
Thank you.
you're glad, we're glad,
Glad.
everybody's glad, okay?
All right, if we could just go to the next slide. So what I wanted to do here is just give you a recap of where we were in our audit year, because we did change we're going from April to March, just to show you where we're at. You can see the yellow stars indicate that we're executing our 2022 audit plan and EH&S compliance.
They were
audit plan.
gold stars.
Oh, they look yellow to me, but they could be gold.
Oh, okay.
And then, so we're executing our plan. We will be completed by in Q1 to complete the 2022 plan for both of them. In terms of risk assessment, we started our risk assessment process mid-October, where we started interviewing key stakeholders across the organization. That ended the end of November. Just last week, my leadership team. We met together to start going through all the data points to start audit planning for 2023. That'll continue till the early March, and by early January, and then we'll share that plan, that first cut of the plan, with all our stakeholders, get their input, make some changes, and then we'll present it in February to the audit committee for review and comment, and then finalize that for presentation to the audit committee in March of 2023, as well as the EH&S compliance risk assessment will start in January. We'll share that with stakeholders, and that will also be presented to the audit committee in March as well. And then April, we start both plans. So that's the timeline. That's the recap. If we can just go to the next slide. This is our scorecard that I usually update the audit committee on. The top half is our audit metrics, and then the bottom half is observation metrics. So at this point, we're like 3/4 of the year through our plan. We're about 79% complete. We're on track. That's where we should be at this point. The middle metrics here are our operational excellence metrics. So the first bars you see are our opinions that we've issued to date. We're at 67%. The middle bars there are how long it takes us from the time of drafting a report to issuing it. We're below the benchmark. And then the other bar next to that is how long it takes us to finish a project between start to finish. We are below, and the average number of weeks it takes us to do that. And then in terms of department utilization, we are at 80%. So a lot of our audit hours are 80% of our allocation of time. The rest of it is for GRC support, data analytics strategy training, and then our administrative time. So There's no questions. We can go to the bottom half of the scorecard, whereas
In terms of that 50% target on opinions delivered, is that, help me refresh my memory on how 50% was set?
is an internal target, we said. It's not a benchmark. I think it's probably a target we may need to revisit,
Which is,
because we're always.
you're taking the bait,
Yeah.
yeah. I'd encourage you to, look at some of those. Okay,
So then in terms of the observations, so the metric, one of the metrics we do track is percentage of high-risk observations identified in our audit work. And last year in 2021, there was 19. So far to date, we've only identified 5. So I'd like to say that, the departments are doing better in terms of monitoring their controls. And then the middle bar here is percentage of high-risk observations that have been implemented. So out of the 17 have been implemented, we do have 2 highs that are open, but I will talk about that in upcoming slides. And then we have 1 so far that's been closed for 2022 out of the 5 that we identified to date. And then overall, 92 out of 98 observations for 2021 have been implemented. So we have 6 left, 2 mediums, 2 highs, 2 lows. They're on track to close according to their due dates. Some of them are due 12/31. A couple of them have been extended into Q1. And then for 2022, 23 out of 63 we've identified so far have been closed.
so to what do you attribute that positive trend?
You mean in closure?
Well, just,
Or-
overall issues, I mean, just, what's,
I think it's has to
what do you
do,
see organizational? We always talk about what are the root cause issues, what are the underlying themes? I mean, editorialize a bit rather than just, the numbers. So what does that tell us? What should our takeaway be?
I think, internal business controls has a big influence on the business, and I think they're really helping management to go through their remediation plans and making sure that they're closing things on time. I think there's a more sense of controls, of mindset of controls. It's getting better because of that. I think there's just management's paying a lot more attention to getting these things closed on time. So that's what overall we're seeing. So if no more questions, then we can go to the right. The right bar chart is just the pattern of how the highs have closed. So for 2021, 11 closed ahead of time, 4 on time, 2 were closed within the extension date, and then 2 have been open, like I mentioned, 2 are open, and then 1 closed ahead of time for 2022, and then 4 are still open. The 4 highs are still open for 2022. But we'll talk a little bit more in detail as the upcoming slides on 2021 items. So we can go to the next slide.
We've got it. Keep going.
Okay. All right. So this is just a summary of our quality assurance improvement program. Every year we do a quality assurance assessment. I have a dedicated team that does that for us. And what they've found that there are these are the 6 key standards that we're very successful at. There were no gaps into the conformance to the Institute of Internal Auditor or IAA standards. And then we had 2 opportunities for improvement related to just documenting our CPE hours, training hours that we get. We weren't doing that consistently, and then really integrating our data analytics process into the audit process. So we'll be tracking remediation, and we'll be updating the audit committee on how we're doing on those improvement opportunities. So the next slide is basically, this is the listing of all standards that we have to comply with, checked all green, so we comply with all of them. That means that we receive the generally conforms rating. That's the highest rating you can get when you do this type of assessment. So we're doing well in terms of compliance with standards. You can go to the next slide. This is just will be an update on our 2022 plan. So we have 42 projects on our plan. 33 deliverables have been issued to date, getting us to 79% complete. We're anticipating about 46 deliverables will be issued by the end of March, because due to 3 engagements that will have more than 1 deliverable. They're either a system implementation or some advisory work that we're doing. We have 6 audits and field work. We're expecting them reports to go out by the end of December, early January. Some may probably go into February, depending on how we issue. But then we have 2 audits that are in planning and 5 have not started, but the audit plan is tracking to complete by the end of February, early March. That's our goal. No questions there. We can go to the next slide, which is our EH&S compliance plan. Some of the phases have changed here. So we have 4 audits that are on the plan. 1 has been issued so far. Now we have 2 in reporting and 1 is in field work. We don't have anything in planning because we were just on site last week, and that puts that project into field work. So this is tracking well, and this will be completed in March as well. You can go to the next slide. That's just the 2022 observation summary analysis. So 63 observations have been identified, as I mentioned before. 23 have closed, and then we have 40 that are open. These bar charts basically just show you the pattern of how these are open or closed by rating and by overall. So to date, nothing is overdue. Everything's on track to close by their dates, but the dates will be peppered throughout 2023 to close. We can go to the next slide, which is 2021's observations. As I mentioned, 98 observations were identified, 92 have been closed, 2 high, 2 medium, 2 low are still open. So what's been closed, so what's open is tracking to close. Their due dates, a couple have been extended. We have minimal extensions. Most, if you can see, most, about 78% of these observations have closed either ahead of time or on time. So that also shows that management's really paying attention and making the efforts to really close these out. We do have a couple that are open.
What do you attribute what I'll call a positive trend if I compare 21 to 22 in terms of number of observations, those that are more critical, much, dramatic drop from 21 to 22?
Well,
what do you attribute that to?
It's definitely paying more attention to controls and policy procedures and implementing, but yeah, also take into account we're at 3/4 of the year. So this is comparing 3/4 to the whole year. I'm not anticipating that there's going to be 19 highs. Again, I don't see that happening, but I really do see a focus on paying attention to the controls, paying attention to, maybe the risks that are coming from that we identify from our audits. So that I see management paying a lot more attention to, and then the results are showing from that attention that's being made.
So in terms of being control, the level of control, consciousness, whatever you see that across the organization, you just see that focus being more consistent and
more than it was in previous years. Definitely. And like I said,
I don't want to imply it wasn't where, I've got to be a little bit careful here, but nonetheless, you just see there's the whole
picking up to
consciousness,
another level
of focus continues to elevate.
Right.
Yeah, it's just ratcheting it up, creating that culture, whether it be risk-minded, control-minded. We have an enterprise risk and management committee where we have a standing agenda item now on all audit points that are open. So we make sure that people are staying on track. And then, as Angela said, Dolly, who runs business controls, along with help from Sandeep's group, are bird dogging all of these open items and mitigating and making sure there is a lot of focus and attention to closing them. So I think there's, and the organization has responded well. They get it and they have embraced it. So I think it's a good response from the overall organization.
Excellent.
Yeah, I think there's just more collaboration and coordination between internal audit and business controls. We put a lot more structure around the business control side, and it's paying dividends.
Great. Good to hear. Thank you.
Okay. Go to the next slide. This is just a summary of Nypa 2021 observations that are open. These are medium rated, but I only wanted to focus on, like I said, there's 2 high, 2 low, 2 medium. I wanted to focus on the highs and mediums. So this one's related, came out of the assessment we did for enterprise portfolio management. Now, this observation was really related to, I guess, the governance around the EPMO and revising their project plan, creating a charter, creating policies, procedures, training, and now, the new technologies that will be coming in 2023 is Project Hub that kind of puts that rounds it all together. I know right now EPMO is working with IT and operations, and they're piloting business case procedures for 3 projects. So that's kind of like test running what they've already developed, and they're also working with risk, IT, strategy, and operations on a prioritization of projects as well. So this is, and they got about 15 policies and procedures that they're working on that they're currently working on and developing. Has been extended to March 31st because this is a comprehensive program. It takes, it needs multiple partners to be able to make this happen. And so I know they really have progressed a great amount in this space. And Adam, if you want to
Sure.
add a
So
little
this
bit
is
to
a new
that.
group that we've been standing up. It's an enterprise portfolio management office, has an enterprise-wide view. They screen, they look at different projects. They screen it before our investment committee. They score them, challenge them. And what they've gone through this past year, they've actually gone in and scored and ranked all the different projects in terms of most critical to less critical, helping management make certain decisions if what happens first, what happens later. The next step, as Angela points out here, is to create a technology they call Project Hub, and it's going to use project management and construction management software, scheduling software that's going to be ubiquitous throughout the organization. Everybody will be on the same platform, the same standard. A lot of transparency, multiple groups get to look into it, from accounting to the project teams in the field, to the EPMO office, and even the project managers in the field, providing good information and helping us control all the project costs for these big projects we're doing and finding ways to make sure that they don't go over budget. So it's been a major effort, and they're still ramping up, and they still have some work to do to get all their policies and procedures set up because they're implementing the new technology. And as that gets done, they'll have those in place. So we're happy with the way it's progressing.
Yep. Okay, the next one is related to fixed assets. So this really centers around depreciation rates for fixed assets. So depreciation rate, depreciation study was done. It was approved by FERC, I believe, October 1st. So this is another a very large project in terms of getting those rates into SAP. So I know Sandeep's team is working with IT, SAP support, working with a FERC expert, working with consultants to be able to get the rates in and configure the system to be able to handle those new rates. So this is definitely a large undertaking. That's why this has been extended as well into the first quarter.
Right. So to Angela's point, so 2 things happened this year. We're very proud of. We had a FERC filing for 2 major initiatives. One is we did the first authority-wide depreciation study in 40 years. Needed to be updated for a lot of reasons. Has to do with our revenues, cash flow, other things that needs to be in sync in terms of what's going on in the industry and best practices today, as well as we've filed for new cost methodology to allocate costs across different assets in the organization. These had to be filed with FERC. To Angela's point, even though we had the results of the study, you have to first file it with FERC. There are interveners that may come in and challenge it because there's all kinds of financial impacts on the people who are paying some of the formula rates and things like that. We didn't have any of that, which was good news, but we only got our approval, as Angela said, in October, and the team is now going through a very lengthy process to update all of the system for the new, useful lives of all the assets, which drive what the depreciation rates will be going forward. I don't know, Sandeep, do you want to?
I think you captured it all.
Okay.
That's pretty much it. You're working on to make sure we configure the system so that we adopt the new rates in the system. Everything is automated going into next year.
Okay.
Okay, we can go to the next slide. This is related to the high observations that are open. So the first one is in a Canal Asset Management Program. Canals Management is they are progressing of developing their asset management program to manage asset risk. So they really had to come up with an overall program, developing a charter, roles, responsibilities, policies and procedures, KPIs to manage and escalate asset risk. That plan will be reviewed with the Canals Asset Management Steering Committee. It's tracking to close by the end of the year. So I just wanted to highlight, this is still, that it was a high that's still open. And then the Canals post-integration review. I know Canals Management has been working with consultant over the last, I believe, year now. And the remediation for this has been broken into 2 phases. So to create a shared service framework. So I listed here the departments that are part of the first phase. That's going to close by 12/31, just that first phase of what that shared service model and services would look like. And then phase 2 is the rest of these departments that I listed here, but they also have to develop policies, procedures, metrics, communication protocols to support the framework. So this is going to be extended out into next year as well. That date has not been confirmed yet, but we know that the phase 2 has to happen yet. So this is a huge undertaking to make sure the services, shared services between Nypa and Canals is consistent. Everyone knows what their role is. The policies are documented. So there's, as I mentioned, there's definitely many business units involved with this. So
Right, I
that's why,
mean, right, so the concept here is,
yeah.
rather than the canals creating their own organizations for administration and different types of services, where NYPA can help provide those more effectively and both cost-wise and efficiency-wise. And then Canals is billed for that by NYPA, and NYPA is reimbursed for that time and effort. But making sure that they have the right support and that they're synced up with NYPA's policies, NYPA's procedures, NYPA's accounting policies, make sure they're all in sync and on the same basis. So just furthering that integration of Canals into NYPA as an overall goal.
Okay, if we can go to the next slide. This is the environmental health and safety 2021 observations. I mean, last year we had 4 audits and we identified about 106 observations, 104 are closed, 2 are high. They're tracking to close according to their dates. We can go to the next slide. That gives you a little bit of detail of what those 2 observations entail. So they're related to the canals. One is the Canals Waterford site. So Canals EH&S management they're working on a plan to approve and train staff on hot work. So that's tracking to close by the end of the year. And then the next one is related to the audit we did at Zeltman, where they were decommissioning their foam fire suppression system. But legislation came out that they have to replace it with a more green type of foam fire suppression system. So that kind of delayed this being closed by 12/31. They have to replace it. So they're going to commission the new one and decommission the old one. And that'll take till the end of June to be able to do that. So this is why it's going out to June. Go to the next slide. And I'm briefly highlight what we've been working on for data analytics. Like I said, we have we're very committed to doing data analytics, providing extra business value to all our stakeholders. So to date, we have built 6 different types of data analytics. 3 of them have gone to continuous auditing, which means that we are periodically running them with new data, giving that information to our stakeholders and saying, oh, we found something that looks a little strange. Can you take a look at it? Is it a breakdown of control? Is it a risk? It could be nothing. But this, I believe, is providing a lot of value. So in terms of, we've been working with Sandeep's team on general ledger, P-card, fixed assets. Those are the 3 that are in continuous auditing right now. The other 3 are we've just started, we've run them like at least once. We'll be running them again and perfecting. Every time we run a routine, we perfect it, or we look for a different analytic. But I believe that we've gotten really good feedback from our stakeholders, a lot of positive feedback saying, this looks great. Can you run this for me? Can you show me this visualization? I want to see this data. This has been a great experience, I believe, for our auditors are getting skilled up and then providing value to the business.
Terrific.
And the last slide, I'm not going to go into detail. This is just the CAA required communications to the audit committee. These are the standards that I have to communicate to you at audit committee. And that's my report. No further questions.
Any other questions for Angela on the update? Okay, Angela, wait, you want to move to the budget?
Yes, we can go right to budget. Okay, so pursuant to Standard 2020, the audit committee is required to approve our budgets. This is why I'm presenting it to you. So if we can go to the next slide. So I'll briefly go over what you're seeing here in terms of what our 2022 actuals, our 2022 budget, and then 2023 budget. So you can see that the payroll and benefits number, these include estimates through November and December. We don't have the final numbers yet, but the offset has been where payroll has been lower, our co-source has been higher. Actually the co-source numbers are also accruals at this point because we don't have final invoices, but this is what we're tracking to this number. We believe that our final actuals are going to get close to this number. We're not going to go over this number at this point. And that means we'll be close to what the actual 2022 budget numbers were. For 2023, the payroll and benefits number here reflects 7 positions that are open at the time that we submitted budget, which was in July. And they only budget for a minimum amount. They don't budget for the full salary. So this number will go up as we fill positions. I do want to highlight that software maintenance has gone up we budgeted higher dollars because we have some contingency dollars in there for GRC. Now, we've been having issues with GRC in terms of our observation management module. We can't, notifications are not working. At this point, we have a consultant that's just, we just started this week with a consultant to look at our configuration to find out what is going on with it. Is something configured wrong? Can we fix it? If the case is that we can't fix it, we may have to go to a different audit management system. So I've added some dollars in there to account for that. I'm hoping that we'll be able to fix this and not have to do that, but that's why that software maintenance is a little higher. We've also bought additional Alteryx licenses, which is our DA tool. So some of our more auditors can learn how to use the tool. And then we've also accounted for budgeting higher for co-source dollars. So this number is at 5.87, but I'm anticipating that it'll drop given the contingency dollars we've put in for GRC. Any questions related to that? Okay.
Good.
So I'd like to ask the audit committee to approve the 2023 internal audit budget.
So moved.
Is there a second? All in favor?
Aye.
Opposed? Motion carries. Right, and next, we'll ask Scott Heiser from partner KPMG to present the next update.
Thank you. Okay. Morning, everyone.
Morning.
I believe you have ours up. There's our slides. Thank you. With me today.
How you feeling?
I had my first positive COVID test last night, so my decision to not drive up was probably a good one. So, but
I would say so.
Though I'll be honest, except for what you might hear me cough, a nasty cough, my symptoms are pretty mild, but my wife's not very thrilled with me in light of all the daycare and ripple effects of being positive. So, but thank you for asking. Actually, unfortunately, Chris is positive as well. So we have a double positive KPMG team at the moment, but things could be worse. But so thank you for asking.
Too much fun at the holiday party.
It wasn't ours, but I was at a couple of Christmas holiday events this weekend, and
Okay.
I am betting that is probably where it was contracted. So, but I don't feel anywhere near as bad as I've heard some of the horror stories. So I'll take it. So we have a brief presentation on the plan, just high level. Chris will go through our team again. The core of our team, myself, Chris, concurring are pretty much the same. We do have some turnover at the staff level, which is not unusual, but at the higher levels, it's the same folks. We've started similar to last year, our planning already. We've had some in-depth planning sessions with management, including Sandeep and Adam. which have gone well so far. Again, our plan, as you may recall last year, I think last year, in my mind, we made some huge improvements on the audit process with management and really eliminate some of the scrambling that's done at year end. And our plan is to work with Sandeep and his team to build on that momentum that we got last year and continue to improve that. Just in terms of some of the bigger issues, I guess maybe 2-3 things to highlight, and Chris will go through the slide. On our deck, and you can, on slides 3 and 6, there's some summary and some discussion on technology. I think last year we highlighted it. The firm a few years ago invested a lot of effort and money into a new audit platform. You'll see it referred to the deck as Clara, rolled out for our public clients first, our private clients last year. It's really just a whole new platform to basically improve our efficiency, our quality of audit, the way it interacts with the standards improve our training our people. It better interacts with our clients and how we exchange information, and facilitates a lot of the automation and technology that the firm really is promoting and requiring in many cases. So we're continuing to do that every year. The goals are kind of add on to that. So and Chris will touch on a few of them. We do, take advantage of that on a few of the audit processes and procedures we perform. Again, all with the eye on doing a better audit, providing better data, and at the same time, I think it makes a better experience for the client with maybe some less headaches and questions from us, but also at the same time, if there's some observations that come out of the results of those analytics or those tools, could provide some feedback to the client. So that started already. That started last year. That will continue, and behind the scenes, but also I think it does result in a better product. The other thing with a highlight really it's on slide 5. Some of the bigger ticket items for this year, I think that's worthy of bringing to the board and audit committee's attention. I'm sorry, it's deliverables, but I think it's slide 4, or it might be slide 4. Is the adoption of the lease standard. I know we've talked about, I apologize, which is the second bullet here with GASB 87. We started that process somewhat last year, and ultimately we'll work through it this year with management, including working through the assessment of all the leases, including the AE2 contract. The other 2 issues that I wanted to just highlight here, one being that there'll be a standalone, I'll say, carve-out audit related to the bonds that were issued last year with the transmission revenue project. So that there'll be a little bit of an undertaking working with management and carving out those accounts and then preparing those financial statements at a standalone level. So that'll be an additional audit report we issue and execute on this year. And then there's potential for a single audit with some of the funds we're working through, getting the specifics of the program and the details of the funding with the Connect All project. But once we work through that may result in a requirement to do a single audit of the funding and expenditures over the project that Nypa ultimately received and then spent. So again, that's still working through that. That deadline is a 9-month post year-end deadline, but that's another probably new, some newer, bigger things going on this year that I think wanted to bring to everyone's attention. And on the single audit, I would bring in a younger director or partner with the requisite experience, ultimately to help, in qualifications to help us get through that. I've done single audits, but it's been a few years. But again, I wanted to just highlight it because it is another new item, different from in the past. So I'll pause there. Chris will take you through some of the highlights of the deck, but if there's any questions of the committee or board, we can wait, or if not, we can go through the rest of the deck and then take any questions.
No, I'm good. I mean, we chatted, Adam, talked earlier about the expanded requirements and your additional involvement. So appreciate the recap, but drive on.
Okay, thank you. Chris, do you want to?
All right, thanks, Scott. If you move to the next slide, slide 5, this kind of highlights some of the things that Scott was mentioning, changes in deliverables. So We have our consistent deliverables from prior year audits, which is the audit report on Nypa's consolidated financial statements and the fiduciary fund statements of the authority's OPEB trust. A report on internal control over financial reporting and compliance with other matters in accordance with governmental auditing standards, and a report on the authority's investment compliance. And then the two new deliverables this year is the auditor report on the standalone financial statements of the green transmission project revenue bonds, and pending the applicability and those requirements being met, a report on the compliance with requirements that could have a direct and material effect on each major program, which is the single audit report in connection with expenditures of federal funds. Moving to the next slide, this highlights some of the technology tools available to the team. And as Scott mentioned, we're working through implementing some of these tools on our engagement to increase the audit quality and efficiencies of our audit. So I'll just highlight a couple which we're exploring the use of and implementing into our audit plan. The compare engine here, which is a tool that could take two sets of data and compare data points in each population to identify differences between those populations. So an example where we could potentially use this and it would be helpful is testing over pension and OPEB census data. So historically, we've just taken the hundreds of census data line items and sampled those for testing, but using a compare engine, you can limit the population and really truly identify the population that changed period over period and subject those to a sample. So better audit quality, better efficiency there, and limiting the number of samples. And another tool we're looking at implementing is the matching engine. This is a little similar. It takes two populations. Instead of seeing if anything changed, it matches a common data element from the populations. So an example of a potential area where we can use this is the search for unrecorded liabilities, where we could take an invoice listing and a cash disbursement listing, match a common data element such as invoice number to identify a true population at risk where we would want to focus our audit efforts on. Again, the focus is increasing efficiencies and audit quality through the use of these tools. Moving to the next section, this next section is our required communications. So slide 8 is just an index of the remaining slides behind it. So if you move to slide 9, what Scott had mentioned earlier, this is our team for this year. As you will see in blue, continuity at the partner, concurring partner, manager levels, as well as continuity in the MWBE firms we use with Team Avaloria and LIFMS remaining as an extension of the audit team. Moving to the next slide. This slide here outlines our considerations for materiality on the audit. So just a few points to highlight here. Materiality is a auditor judgment-based consideration and includes both qualitative and quantitative factors in determining what would impact the users of the financial statements. And one thing to note as well is materiality is required to be set at the opinion unit level. So therefore, materiality considerations are applicable to the Nypa's consolidated financial statements, the fiduciary fund financial statements, and the green bond transmission project revenue standalone financial statements. So the engagement team will be developing 3 separate materialities to perform our audits supporting the deliverables that I mentioned earlier. The next slide outlines the timeline of the audit, which should look relatively familiar. There haven't been any major changes to our audit timeline aside from continuing to work on moving work up into the interim period from year end and remove some of that crunch time. So in the spring and summer, we spend time debriefing on the prior year and meeting with management to get any updates on our understanding of significant changes at Nypa or any activities during the current year that would have an impact on our audit plan. In the current period that we're in, the interim period, we are in the process of performing interim substantive procedures for some of the significant audit areas, as well as obtaining an updated understanding of the core processes at Nypa. And during year end, we'll be finalizing our audit procedures, evaluating the results. We will communicate those results to the audit committee and issue our opinion on or before March 31st, which is a consistent timeline with prior years. The next slide highlights the results of our preliminary risk assessment procedures. So we have one significant risk identified, which is the risk of management override of controls, which is a risk of fraud that is present at all entities. This risk is addressed through a performance of multiple procedures. And just to highlight a few, identifying and testing high-risk journal entries that the engagement team identifies, inquiries with management, and testing the completeness of journal entries throughout the period. And then some of the other significant audit areas that I'll just highlight, excuse me, are revenue recognition with a focus on testing price and quantities of customer invoices and confirmation procedures of sales into the New York ISO market. Capital assets with a focus on the capitalized cost to ensure they meet capitalization criteria rather than should be an expense. And operating expenses just due to the significant volume of transactions recorded throughout the period. And then the last couple of things I'll highlight on this slide are the estimates we've identified. So we have an estimate identified for the fair market value recording of investments, the evaluation of pension and OPEB obligations, an estimate related to the adoption of GASB 87 leases with a focus on the discount rate utilized in calculating the lease balances. And then the one new estimate identified here that has kind of come into scope due to some significant activity in recent periods and in the current period is the valuation of commodity derivatives. So we'll test those, the valuation of those at period end that are open positions. Moving to the next slide, this just highlights the involvement of others in the performance of our audit. So we utilize KPMG's national pricing desk in our investment testing, actuarial specialists in our valuation of the Nypa and Canals OPEB and pension liabilities. Internal audit we meet with during our planning and during our year-end procedures to understand the highlights of their work performed throughout the year in conjunction with risk assessment. And lastly, as I just mentioned, related to derivatives and the increased activity there, we have a new specialist that will be engaged in the valuation of those derivatives at year end. Moving to the next slide, this is a slide of this is a summary of the upcoming new effective accounting standards over the next 2 years. I will note that at this time, none of these are expected to have a material impact on the financial statements, aside from the adoption of GASB 87, which is being adopted in the current year. But that will obviously continue to be assessed by management and KPMG as the adoption becomes effective. And then the last couple slides here are summaries of the responsibilities of KPMG and management regarding independence, responsibilities for the preparation of financial statements and internal controls. So in regards to independence, it's a responsibility shared between KPMG and management and to continuously be evaluated. And as of today's date, KPMG remains independent of Nypa. And then jumping ahead to slide 17, this slide just includes some inquiries of the audit committee on various topics, where if the audit committee becomes aware of any relevant matters, to please inform us as the auditors as deemed necessary. So that concludes the planned required communication slides we do have some appendix slides here regarding some KPMG thought leadership, ESG, diversity, equity, inclusion, and environmental sustainability, which we have some more materials behind the scenes that we'd be happy to share or discuss if anyone had any questions. But other than that, happy to take any questions on our prepared materials today.
Any other committee members have any questions?
So you're getting what you need when you need it from the team at this point?
Yeah, we're in our intro period, and we've received, everything requested of management so far. Things are moving along, at a speed that we're expecting, and again, an effort to move things up and out of the year-end period.
And no surprises that you didn't anticipate, nothing, no caution flags at this point that we should be aware of as you go into year end?
Nothing for me, Scott. I don't know if you have anything there.
Not this far, John. And like I said, we try to highlight, obviously, some of the newer things that'll be a little bit of a lift for both teams will be the lease and the new financial statements. Again, not a red flag per se, just something new, different, that may be a little bit extra effort on everyone's part.
Yeah, expanded scope, get it? Okay. All right, great. Appreciate it.
Thank you. So there was no vote required on this update. Next up is the consent agenda, which consists of meeting minutes, is now before the members for adoption. I ask for a motion to approve the consent agenda.
So moved.
Is there a second?
Second.
All in favor?
Aye.
Opposed? Motion carries. The next meeting of the audit committee is to be held on March 28, 2023. I'll ask for a motion to close the meeting.
So moved.
Is there a second?
Second.
All in favor?
Aye.
Opposed? Motion carries. Meeting over.